Hello, and welcome to an Accounting Principles screencast by Tegan Whitfield, where we'll be seeking to understand the issue of revenue recognition. There are three goals in today's lesson. Goal 1, to understand the revenue recognition principle. Goal 2, to understand its place in the accrual accounting method. And Goal 3, to be able to use the principle of revenue recognition in recording real-world transactions. So now that we have that under control, let's get started. Revenue recognition is all about timing. It allows us to determine the accounting period in which revenues and expenses are recorded. Under the cash accounting method, companies record a transaction when cash is received and when it is paid. But under the accrual accounting method, revenue is recorded when it is earned and expenses are recorded when they are incurred. The two events do not have to happen at the same time. This is revenue recognition. Let's take a closer look. First, let's assume that our accounting period starts on the first day of each month and ends on the last day of each month. Now, in preparation for the upcoming federal election, Clive Palmer decides that he needs to spruce up his image. So he decides to employ someone to help him clean up his mechanical dinosaurs. On the 1st of February, Clive pays Jim's Dino Wash to wash and polish his mechanical dinosaur collection so that they are looking fabulous for his federal election media announcement. However, the service isn't performed until the 1st of March. So what should Jim's Dino Wash do? Well, they should record the revenue in March because that is when the service was completed. This is known as deferred revenue. The cash was received prior to the revenue being earned. But on April 1st, a low-flying seagull deposits some political advice on Clive's dinosaurs and he's forced to have them cleaned again. However, his loyalty check from Civic hasn't cleared the bank, so he's unable to pay Tim's Dino Wash until May. So on the 1st of May, Clive pays for the service, which was completed 1 month earlier. What should Jim's Dino Wash do? They should record the revenue in April because that is when the service was performed. This is known as accrued revenue. This accrual method of revenue recognition allows business to more accurately represent their financial position as required by the generally accepted accounting principles. It also shows that the receipt of cash is not needed to record a revenue. So let's review what we now understand about revenue recognition. The focus is on earning the cash rather than receiving it. We record a revenue when it is received and we record an expense when it is incurred. The term deferred revenue is used when cash is received before it is earned, while the term accrued revenue is used when cash is received after it is earned. Now you too can use the revenue recognition principle in accounting for real-world transactions. Thanks for watching.